Welcome to the Newtown Big Dreams podcast, an interview-style talk show that's your gateway to the fabulous and fascinating people who relocated to start a new life. Whether you're new to our podcast or your city, our fellow neighbors from across Canada, North America, and the entire English-speaking world share their stories of reaching new horizons and big dreams. So sit back and relax as we navigate in-depth and intimate conversations with entrepreneurs, thought leaders, executives, creatives, and anyone who can share their story about their Newtown big dreams. And now, here's your host, Luke J. Menkes.
Charles Reed, and he's in Louisville, Texas. Charles is a certified public accountant. He's a U.S. tax court practitioner. He is a member of the Internal Revenue Service Advisory Council, and he is the founder of a company called Get Payroll. Mr. Reed's companies have provided full-service payroll services, payroll tax services, and other payroll-related services since 1991. Charles is an accomplished senior executive and entrepreneur with more than 50 years of financial leadership experience in a broad range of industries, and he is the author of 4 books, the latest one being the Payroll Book, a guide for small businesses and startups. And I just want to say a lot of our listeners are Canadian, and I've lived and worked in both countries and paid taxes in both countries. So a lot of this is similar. There are some key differences, which I'll explain in the show notes, but a lot of this stuff should be familiar to Canadian taxpayers as well, as far as what to do when you get in trouble and the best way to structure your payroll and your tax setup. So, Charles, thanks so much for coming on the show today.
My pleasure, Luke. It's a pleasure to be with you today.
All right. So let's start with the bad news first. I get a notice from the IRS. What should I do? Should I burn it? Should I crumple it up and throw it out? Panic? What should I do?
Well, after you calm down, read it. That's the first thing to do, is make sure you understand what they're saying. I get clients who call me and they're all upset about a letter, and it says you don't owe anything. Okay. And a lot there's 4 major reasons in employment taxes, particularly, that they will notify you. You didn't file your return. You filed it late.
Right.
You didn't pay your taxes, or the correct amount of your taxes, or you paid them late. Now, if in fact you filed your return and they're saying you didn't, send them a copy of it along with proof that you sent it. I always recommend that everything be sent certified mail, so you can prove that you sent it on such and such a date. And in the U.S., a certified letter, a certified receipt, acts as proof of the date of mailing. Nowadays, you can actually get a receipt from the post office online and all kinds of things. So if they say you didn't file it or didn't file it on time, you've got proof. Now, if you didn't file it, go ahead and file it immediately and stop any additional penalties from running. If you pay the deposit on time, you'll have proof that you did so. If you paid the proper amount, you'll have proof that you did so. If the amount they're claiming is different than the amount you calculated, you need to figure out why it's different. Okay? They may have... The IRS makes millions of mistakes every year. The IRS is 100,000 people. It has obsolete technology, something going back to the 1960s. It has, in its opinion, it has inadequate budget. In fact, the 3 biggest problems as far as the IRS is concerned are lack of budget is number 1. Number 2 is lack of budget. And number 3 is lack of budget. So They don't think they have enough money. Whether you or I think they have enough money doesn't matter. They don't think they do, and therefore training suffers, recruitment suffers, headcount suffers. 40% of their people are eligible to retire in the next 2 years.
Wow.
So there's a lot of problems at the IRS. The new commissioner, Chuck Reddick, is working very hard at it. He's an outsider. He's not a long-term government worker. He came from private industry. He was a very prominent tax attorney on the West Coast, San Diego, and has been bringing in people and promoting people and working at solving some of these internal problems. But if they tell you that you owe more money, you need to figure out why they're telling you that. They may be wrong. They may be right. Now, the IRS in fiscal 18 issued $13 billion of employment tax penalties. More than half were abated or reversed.
Really?
Well, mostly by people like me who knew what they were doing. And that tells you there's lots of mistakes. And I've seen some doozies over the years. I've seen electronic files have the dates changed on them when it hits their system. I can prove I sent it with the date of the 16th, and they show it on the 26th. How that happens is absolutely beyond me, but it does. That's why you need to be very careful about record keeping and proving what you did, when you did it, how you did it, why you did it, and so on. All that's critically important if there's a problem. If there's no problem, it doesn't matter. But it's like auto insurance, you don't need it until you have a wreck. So
Right. Yeah, exactly. Can you tell, when you look at the person's paperwork, can you tell right away if the IRS made a mistake? Or does it take a little digging on you?
Sometimes, yes. Yes and no. Sometimes you can tell immediately. I mean, I had one that came in, and they were offering a refund of $7,000 on a federal unemployment tax. Well, the client's total federal unemployment tax for the year was under $400, but they wanted to send him a refund of $7,000. That was a screw up. That was just obvious. Okay. And we get things like that. You get the $1 million penalties, this kind of thing. That's boom, you just go obvious. But sometimes it's harder to tell. They have some sort of calculation, and they say, well, you really owe this amount. Sometimes it's not too much. Sometimes it's a lot. So you have to then research, go into the paperwork. Now, for our clients, we do the payroll. So we know we have everything. And that's why we take a power of attorney for our clients so we can advocate for them with the IRS directly. Because we're experts, and frankly, our clients are experts in their industry. They're dog groomers or manufacturers or home builders or mechanics or whatever. They're not payroll tax experts. That's our job. We're payroll tax experts, so we deal with the IRS and we fix it. We're like car insurance for your payroll. If there's a problem, we take care of it.
Right. That's awesome. So you've got 5 tips to avoid employment tax penalties. What are the 5 things that we should be doing to avoid those penalties?
Well, first of all, make sure all your arithmetic is right. Okay?
Okay.
The major problem, the major mistakes, the majority of mistakes are arithmetical. People add things up wrong. People write it down wrong. They transpose numbers. They do silly things like that. Don't do that. That's the first thing. Then make sure all your returns are timely filed. Don't be a day late. Don't be an hour late. Don't be a second late. There's penalties for that. So that's number 2. Make sure all your deposits are on time. Okay? Make sure they're not in the U.S. Literally 1 second late is a 2% penalty. 1 second.
Wow.
So make sure they're all done timely. Make sure you make the right amount. Okay. So those are, and whatever the fifth one is, but it's basically it's down to dotting your I's and crossing your T's. And if you're not up to that, if you're too busy, outsource it. Get somebody whose job it is to dot I's and cross T's. I'm a CPA. I'm a professional nitpicker. Okay, this is where talk about anal retentive. That accountants are that way. So that's good in an accountant. Okay, so people like us, just get off on dotting I's and crossing T's and ticking and tying everything. So if that's not your bailiwick, if you're a sales type, a bonhomie, a backslap, well-met good fellow, dotting I's and crossing T's is probably not your forte. So.
Right. Yeah. You want to be in sales maybe, but not taxes. Yeah, for sure.
Exactly.
So a brand new business, what does a brand new business these days have to do to be tax compliant in the States?
Okay. There's a lot of things. First of all, you have to understand what your tax situation is. And depending upon what your entity is, whether you're a corporation, an S corporation, a partnership, an LLC, a sole proprietor, your tax responsibilities are different. So that's the first thing to do is understand that. And for instance, if you're an S corp, you have to take salary if you work in it. You don't get to take draws as you do as a sole proprietor. So you have to understand all of that. That's the very first thing. For instance, in an S corp, you can take distributions, but you have to take salary. And if you take too much distributions, the IRS will come in and recharacterize that and then charge you all the taxes you should have paid, plus interest and penalties. So you've got to understand all of that. If you don't, read up on it. That's one of the things in my new book. Or hire somebody that understands that and consult with them. Talk to your CPA, talk to your attorney about these things. That's the first thing. Next thing is make sure you're registered with all the taxing authorities that have authority over you. And these can be surprising. In Philadelphia, the school district taxes you, okay, on your payroll. City of Indianapolis, City of Kansas City, City of New York have local taxes that if you're not aware of, will come back and bite you. So you've got to know all the taxing authorities. You've got to register with them. You've got to get your numbers. You've got to understand what you have to do to be compliant with them. All the forms, all the deposits, all the timing, all that kind of stuff. Now, once you have that, then when you hire people, you have to classify them properly. In the U.S., the Department of Labor says 70% of all employers misclassify workers. There's two ways, either as independent contractors versus employees, or as subject to overtime or not subject to overtime. So if you're not sure whether these people are contractors or employers, and contractors or employees, or whether they should be getting overtime or not, figure it out. Again, in the book, we go into that in great detail, because it will come back and bite you if you do it wrong, because everything you're doing in terms of deposits and forms and filings don't match the law. And so they're wrong. And it's no longer the IRS's mistake or the state's mistake, it's yours. And they will hold you responsible for all the taxes, again, plus penalties and interest. So now, once you have your entity and you are registered with everybody and you understand what your employees are or are not, then you've got to do payroll and all the intricacies of payroll, of overtime, of blended overtime, Chinese overtime, pre-tax deductions, post-tax deductions, on and on and on and on. It's very complicated. There's lots of things that in the U.S. has been changing drastically over the last 12 years. Under the last two administrations, and under this one is changing again wildly. The COVID has brought in all kinds of things with the FFRCA, tax deferrals, employment retention credits, and so on and so forth. In the U.S., 70% of all federal revenue runs through the payroll system, withholdings and taxes, employment taxes, and so on. So most of the time that the government changes a law in regards to taxes, it flows through payroll. So you've got to know all those changes and all those details about how you're paying people and what's affected and what's are credits and what are not credits and what you get to deduct and what you don't get to deduct and all that. It's a complex subject.
Yeah, no doubt. Did I hear you say that municipalities will actually take payroll tax? Like,
absolutely,
you've got to set up your payroll tax because in Canada, as far as I know, we pay property taxes, and you'll have a business licensing fee. But I've never heard of a municipality attaching to the payroll tax.
There are 15,000 taxing authorities in the U.S. There are thousands of local taxing authorities. Like I said, some places it's a school district that taxes you. Pennsylvania was notorious for hundreds of local tax authorities. Ohio, and then cities have passed commuter taxes. New York, if you're a professional athlete and you go play a game in New York, they're going to want taxes from you for that game. If you work in New Jersey and you live in New Jersey and you work in New York City, that New York City wants their share. So does the state. I had a client who his home was in Mississippi, but he worked all year in Texas. And Mississippi said, well, you got to pay us Mississippi taxes. And he said, I worked in Texas. He says, well, whatever taxes you paid in Texas, we'll give you a credit for. Well, there's no income tax in Texas, so the credit was zero.
Oh, geez.
But yeah, wow. Cities, the city of Aurora, Colorado, south of Denver, charges $2 a month if the business you work in is within 1/2 mile of the interstate highway that runs through Aurora. I was dealing with one company, and we changed the signage on the door, on the front and the back door, to make the back door the front door, which was outside of the 1/2 mile, instead of the front door that had been within the 1/2 mile. It gets crazy.
That is crazy.
So we saved them $2 per head per month.
Yeah. Well, that could add up for a bigger company. That's going to add up for sure. What's a PEO? And what? It's not beer. And why do they suck?
PEOs is a abbreviation for Professional Employee Organization. It's what used to be called staff leasing. Well, staff leasing was originally created to cheat the tax man. That's what its purpose was.
Okay.
And a number of the original people in the PEO industry went to jail over it. Most of that's been papered over and is no longer available to cheat and to shift tax burdens. But the PEO is very, very expensive. Our major competitors have PEO divisions and push them, religiously, because they are so profitable to our competitors at the expense of our clients. They want to sell you workers' comp and group health and tell you they give you HR services. Well, the workers' comp companies have gotten smart, and most of them do individual underwriting now for businesses. They don't underwrite the PEO, they underwrite each company. Then the group health, and truly, if you've got 10,000 people, you can get a better group health premium than you can if you've got 10. No argument about that. Economies of scale, and the insurance companies know this. But the PEOs will have a Cadillac policy. which is great. You can get an inexpensive Cadillac policy if that's what you want. Okay, it's not cheap, but it's less expensive than you bought it yourself. But if you want a Ford or a Chevy policy, you're SOL. So you're overpaying for insurance you don't want. You don't get the workers' comp benefit that they promised you. Then the HR. Well, they're not hiring people for you. When you got to fire somebody, you go in and say, Joe, you're fired. They don't come do it. When Sally comes and cries on your shoulder because her husband's cheating on her, the PEO's not there to take care of you. As a small businessman, you're the HR department. Okay? They're not handling your people for you. You are. So to a small business, the benefit is almost non-existent and the cost is exorbitant.
Yeah.
We had a client, imaging center, owned by doctors. And one of the doctor's golfing buddies was a PEO salesman. And he convinced the doctor that he ought to look at the PEO for his company that he partially owned with other doctors. And so they came in and they quoted us on it. And I sat down with the administrator because I was doing a lot of work for her along with the payroll. And when it got done, they would get the same services that they were getting. It would just cost them an additional $300,000 a year. I have never seen a PEO that can't be replaced with a payroll company, an insurance company, a workers' comp carrier, and save at least $1,000 a year per employee minimum. So from my point of view, PEOs are very, very expensive alternatives that make little or no sense. People argue with me, and I've got PEO people that make nasty comments on my articles and so on. Mm-hmm. But I've never seen it where the employer can't save at least $1,000 per head per year. If you're in a PEO and you want to talk about it, call me and we'll walk through it. I'll show you.
Okay. So how do you force the IRS to abate a penalty? Like we've all heard horror stories where they say, well, we're not doing it. How can you force them to actually do the right thing?
That's why I'm a U.S. tax court practitioner. Okay. There's a few hundred of us in the country and allows me to represent my clients in tax court, even though I'm not an attorney. But I know the law and my staff knows the law and we understand how it really works. And being on IRSAC, which is the IRS Advisory Council, I met all the players at the IRS, and I know most of them by name, and I have their phone numbers. So, first of all, I know the law. So if that's not real, if it's not right, if it's not true, I understand. I can explain the law to them. I can show them the law. I can send them case law to show them that they've made a wrong statement, a wrong opinion, that they're incorrect. And they do that, lack of training sometimes, lack of knowledge. And of course, if you get into collections, they don't care. They don't care whether you owe the money or not. But even if you're in collections, there's certain things you can do. You can file a 12-153, which is request for a due process hearing. That stops all collection efforts and gets it in front of a far more experienced person to look at and make a determination on. So you have all kinds of appeals. You have all levels of appeals. And this is what you should do as a businessman, is never give up. Appeal, 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 and if necessary, take it to court. If you're right, don't give up. It's a whole series of no's followed by a single yes. And when they say yes, we'll abate it, say thank you and go away. Don't say anything else. You're done. It's like sales. Once they sign the contract, shut up. Right. So it's a matter of knowing. They'll tell you things that aren't true. They do it to me periodically. I say to the examiner, now let me talk to your boss. Let me talk to your supervisor because he knows better than you do. That solves it in a lot of cases. We had one, and this is an extreme one. I don't argue. It was a $95,000 penalty. It took 9 years to get it abated. I had gone up the ladder through all the levels of appeals. Finally was dealing with a guy that had the whole region of the U.S. He wouldn't return my calls. So I called the deputy chief of appeals in D.C. and said, Sally, this guy won't call me back. And she said, Charles, I'll have him call you back. Don't worry about it. He called me that afternoon. We got the whole thing restarted, re-examined. 3 months later, my client got a $400 refund instead of a $95,000 penalty. Extreme, I agree, but it happens. We've had things that take 5 years to fix because the client screwed up on sole proprietor corporation and filed the things wrong, and it was a mess. We had one that went to tax court. We had a competitor. We'd taken over a client's payroll. The competitor issued a W-2 anyway. Of course, 2 years later, the IRS says, well, you've got all this unreported income. We have a W-2 on it. And the client goes, no. And the previous company, since it was more than a year old, would not fix it. So I ginned up a petition to the U.S. tax court, going through the details, $60, filed it with the tax court. A month later, I got a call from district counsel saying, don't worry about it, we fixed it. Cost $60. Those are the things you can do if...
Done.
And
nice.
I'm not saying a businessman can't do them. These are not, this isn't magic. This isn't, some wondrous thing. It's experience and knowledge. And if the businessman, one of your listeners, has the knowledge to do it, they can do exactly what I do.
Yeah.
But if they don't, your client, I don't groom dogs. I don't build houses. I don't make my own clothes, okay? I don't butcher my own steak. I don't make my own shoes. I'm not an expert in those things, okay? Right. So I outsource that. I have a tailor that makes my suits. I buy Allen Edmonds shoes. So on and so forth. I outsource those things. And so payroll and payroll taxes is one of those things I believe in outsourcing. Yes. I mean, I make a living at it. But, it's one of those things that it's not your core business. And if it's not your core business, outsource it.
Mm-hmm. Yeah, it makes sense. And it's so confusing. And it could cost you a lot of money if you make mistakes, right? So
absolutely.
How do I know what business entity to choose if I'm starting up a new business? Like, for example, I want to self-publish books. So I'm going to hire an editor, I'm going to hire a graphic designer, and I'm going to sell these books on a website and hopefully make some money. So what's a good entity?
Okay, in that case, in that particular case, your liability is minimal.
Right.
Okay? First of all, you're not hiring the editor and the publicist. They're independent contractors. They have their own business, and you just write them a check and they do their work.
Right.
At their own speed, use other people if they want, at their own time, and so on. They're not employees, so you don't have employment tax liability. And then it's as a sole proprietor, you don't have to file anything. It's simple. It's easy. You're not making tax withholdings. You're not making tax deposits except personal ones. Mm-hmm. So in that particular case, a sole proprietor becomes an easy situation and not a bad taxable entity. It's not the best taxable entity. But if you have liability, you'll want to incorporate or form an LLC because that's the cheapest liability policy you will ever buy.
Okay.
As a corporation, you're not personally liable for actions of the corporation. So if somebody slips and falls at the office, or a product you make injures somebody, or the house you built falls down on somebody, you're not personally liable. Your house, your savings, your retirement is not at risk.
Right.
So it makes for a very desirable liability situation to prevent those liabilities from encountering you personally. Mm-hmm. If the company gets sued and you lose, you just give them the company and start another one the next day.
Right. Right.
So the corporation becomes a very desirable entity, and in an S corp, you have some tax advantages you don't have in a sole proprietorship. In that part of your income can be distributions, dividends, and not subject to employment taxes. So if you're making, in these days, anything, there's a tax savings to being incorporated. Now, there's costs that go with it. You have to file a corporate tax return and file your payroll tax reports and so on. But your savings can be substantial. They can be tens of thousands of dollars a year in tax savings.
Right. So you mentioned that you grew your business from 1K to 7 figures. How did you do that?
Slowly.
So slowly, like decades?
It took 30 years. Decades, yeah. It took 30 years. That was one of my biggest mistakes, is not hiring marketing in much earlier on. I backstop myself where I'm weak with other people, and I didn't realize how important marketing could be. And for your business listeners, it's critical from my point of view now. And we are getting more leads and more sales than ever due to my marketing people. I'm on here with you, Luke, because of my marketing people. They said, Charles, you need to do these things. Right. You need to talk to these people. You need to be out in the public. They need to be aware of you, so they're aware of your services and your business, and they'll be interested. So I do several podcasts a week and enjoy it. I like talking to people. I like solving problems. So marketing is critical, and that's what has allowed us to grow. I've always been passionate about my business, and in a one-on-one situation, I can sell people per se, but how do I sell somebody in California or New York or Michigan or wherever when I'm in Texas? It's a little tough to do. And marketing, and particularly now with the web, makes it viable, and it's working for us very nicely.
Oh, for sure. Yeah, exactly. And there's hundreds of people going to listen to this. So that's more conversation than you can have by yourself one-on-one.
It's a multiplier. It's a force multiplier.
You mentioned different states. You're able to offer your services in all 50 states?
All 50 states in the District of Columbia. I think we're in 48 states currently. I don't think we have anybody currently in Alaska. We have had in the past. And I don't think we have anybody in Maine. We picked up a Hawaii one just the other day. So we picked up Hawaii again. So yeah, we operate in all 50 states. And one of the things we do is particularly for your listeners, and we've had this a number of times over the last 30 years, is we'll pick up doing payroll for a foreign subsidiary. In other words, a Canadian company or a UK company will have a subsidiary here in the U.S. And they'll contract with us. We'll take care of the payroll and all the filings and everything else. And they just wire us the money every payroll, and boom, we handle that. We also pay foreign people, but we pay them through a U.S. bank account. We don't do any foreign transactions. But if they have a debit card on a U.S. bank, even though they work in Mexico or Canada or whatever, we can deposit the funds in a U.S. bank for them and for their employer. We've done that for a Canadian company.
Okay. Is there a minimum size company or a maximum size?
Minimum, there has to be one. There has to be somebody there. One employee.
So, I mean, if
that's
it's just
all it takes.
One person paying payroll, getting payroll with deductions and everything, you would take that as a client?
Absolutely. We have a number of professionals, lawyers, public speakers, other people who have, or like your author, who has incorporated for liability purposes, has himself as an employee, and maybe pays a couple of independent contractors. Whether he pays them through us or himself doesn't matter. But yeah, we have a number of people that pay just themselves. And that's fine. We handle that because you're still required to file all the things and be legal and make all the deposits and everything else. So
yeah,
we just take that. You don't have to know how to do it. You just call us, once a month and tell us how much you want to get paid.
Right. Yeah. And you've got to be up to date on all the state tax laws, not just federal tax, but state tax and local tax and municipalities and all that stuff.
Yeah. If you're in multiple states as a business, it's almost an impossibility to keep up with it. We take the trades. I get 5 emails, newsletters a week from the Internal Revenue Service. I get emails from different states literally every day. We take all the trade journals. We keep up on things. We get all the press releases. I used to do financial analysis, and I was a stockbroker and a registered investment advisor. I like that. I had to give it up because I couldn't keep up on everything in payroll and keep up on everything in the market. I don't do personal taxes anymore, except for a handful of people, because I can't keep up with it. I can't keep up with all the changes in multiple industries. So, I chose, Ruth and my wife and I chose to stay in the payroll industry and give up these other things to be the expert in the payroll industry, which allows us to do things for our clients that a lot of people can't. I can't be everything to everybody, so I chose payroll.
Yeah. Are you from Louisville?
No, I grew up in Iowa. I grew up in Davenport, Iowa, on the Mississippi River. Went to high school there. After high school, I joined the United States Marine Corps. Spent 4 years in the Marine Corps, 2 years overseas, including a combat stint in Vietnam. Came back, was stationed in Kansas City, where I met my wife and married her. She had 5 kids when I married her. I claim insanity. But we were married for 46 years until she passed. So, it was a good marriage. It wasn't perfect. Anybody who says they have a perfect marriage also lies about other things.
Yes.
So it was a good marriage. And we started the business together after I gave up on the corporate life here 30 years ago, and had a great time, made a nice living, and did well, and have developed a lot of friends out of our client base that, you're in somebody's wallet every 2 weeks for 30 years. You get to know them.
Yeah, for sure. So how did you get to Louisville? I must have missed that part. So you met in Kansas City.
Well, Ruth and I were married in Kansas City, and in 1972, Kansas City was in the middle of one of their periodic union construction strikes, and it was dead of winter. All the fountains were still frozen, snow on the ground, and we decided to move south where the economy was better. Remember, this was 50 years ago. And we got down to Dallas, Texas, on I-35 coming from Kansas City. And it was 6 p.m. in the evening. Ron Chapman, very famous local DJ, was doing evening drive time, and it was 63 degrees. And we had the windows open.
Yeah.
And we thought we were in heaven. So we found a place and went to work. And I went to school down here. I went to University of North Texas in Denton, which is just north of me. And we stayed here. I've moved away several times, but keep coming back because I like the Dallas area, the DFW area very much. It's very much home now. Again, we've been here for almost 50 years.
Okay. So was Louisville a suburb?
It's a northern suburb of Dallas. So we're actually in Dallas County, but it's just north of the city of Dallas.
I see. Yeah. Well, one of the interesting things about my show is I like to do a little bit of geography because everybody's got a story of where they came from. Very few people have been born and raised in the same town. There's almost always a story of a big move like that, from Kansas City to the Dallas area. So I think it's interesting. With the Zoom calls and everything, we're talking to people from all over the planet and all over the United States and Canada. So it's always interesting to hear, how did you get to Louisville? So thank you for sharing that story.
My pleasure.
And you've got a great book called The Payroll Book, a guide for small businesses and startups. And your payroll services, which we've talked about, people can find you at getpayroll.com. And there's your book. They can find
me at getpayroll.com. The book is available on Amazon or also at thepayrollbook.com. And for your listeners, specifically for your listeners, if they're interested in a book, go to thepayrollbook.com and in the discount code, enter podcast. and we'll give them a free book.
Perfect. Beautiful. Thank you, Charles. That's been an interesting discussion, and I'm a little less nervous now about my tax filings because I know there's experts like you that can help us out of a jam.
We're more than happy to anytime, Luke, and it's been a pleasure to be with you. Thank you for having me.
Thank you, too.
We hope you enjoyed this episode of the Newtown Big Dreams podcast with your host, Luke Menkes, and his authentic guests. And we love our listeners and hope you subscribe now to learn more about the amazing journeys of our incredible guests who relocated to find a new town, big dreams. And remember, make your dreams big.